afternoon, everyone. K Kim here with the Traders Club. Today is December 22nd, 2017, Friday. Welcome to the market update. As I record this video, market should be open another 20 minutes. So, yeah, we're going to see some flashing lights on your left. Today, we're going to be talking about Spider, IWM, XLF, XLE, Twitter, gold, and we'll talk about for the first time Bitcoin, and just been getting a lot of requests for you guys want me to look at Bitcoin. So we'll look at that and we'll call it a day. I want to say Merry Christmas to everyone. It's been a great year, one of the best years I've had in my trading career, and I think I'm sure a lot of you also had a good year. This has been a phenomenal bullish run we've had since since last year. And I believe that looking at things long term, I also believe that this bull run has not ended. It's going to continue. Though we are looking at the market, if we look at this market in 2017, this market has been the most low volatile market, I think, in 20-30 years. And it has been one of the most smooth market in 20-30 years. Probably the last time that was as smooth as this was 1994, 1995. If you go and kind of study that, it has been one of the most smooth market we've seen. We have not yet seen 5% correction all year long. The worst thing we saw was here when we saw about 3.5% correction. Remember what we talked about, though, if you can recall, back in December and January, I talked about that. I talked about how I believe that we're not gonna see 5% correction this year. I think that I talked about how a worst case scenario, we're probably going to see 3%, maybe 4% at best, but anything more than 5, anything 6, 7, we're probably not going to see it this year. And looks like we have another couple, 4 more days to go in trading, 26, 27, 28, 29, before the end of 2017 trading sessions. And so unless we see abrupt sell-off next week, we haven't seen 5% correction this year, though I do believe that 5% correction is still coming before March. It could be January, it could be February, I'm not sure. But I also wanted to note that sometimes we see correction through time. So we may not, let's say if this thing is decided that it is going to correct through time and start to consolidate, right? Then we only gonna see another 3% before moving higher. But if this thing decided it's gonna see correct through price, then we might see 5 to possibly even 6% correction on the equities, on the S&P 500. So I've been continuing to trim my positions this week and last week, and as the market continues to move higher, obviously I hold both long-term calls. There are leaps. I get asked a lot, so I'm just kind of saying that, when I get into a position, there are always leaps. My calls are usually slightly out of the money or at the money, and I usually buy calls that expire maybe 1 year or more. And then I also hold shares. So a lot of my shares that I've been accumulating really since 2016, I'm holding almost everything on it. And I'm not closing any of my shares because I believe the market have a much more upside move looking at the long term, right? So, but I've been closing out my call positions on some of the equities. Also, I'm completely out of my spider calls that I've been accumulating since March, and I've been buying the dips. I've been closing I'm completely out of spider calls. I am completely out of XLF calls. That again, I've been also accumulating since March. I've been trimming on IWM calls, but I'm still holding pretty good size. And so those are how I've been playing it and how I've been looking at this market. And I want to continue to give benefit of doubt. You see, when I say I want to continue to give benefit of doubt and I'm bullish on the market, that has nothing to do with me going long here. You see what I mean? Like they're quote unquote experts that come on TV or YouTube and say I'm bullish here. Or I think that the market is gonna go 280 or 300. That means nothing. Anybody can say that the market is bullish, right? But it's hard to say that, well, I'm going long here. When was the last time anybody say about anything, any stock, that they say, well, I'm bullish on I don't know, Nvidia? That really means nothing. Does that mean that you're going long here? What does that mean? Like, I'm bullish on the market, but I'm not gonna go long here. I'm bullish on the market, but I close out all of my call positions. I'm bullish on the market, therefore I have all of my shares. You see that these sayings that people say and do on Twitter and stock tours, it literally means nothing. It doesn't help anybody, right? So I try to do my best to really articulate, what's the market is going, right? I remember I talked about how I believe a 5% correction is coming, but I always say at the same time I want to give benefit of doubt to the buyers. You see what I mean? It's never black and white in the market. I want you to know that. It's not just price and volume. It is more complicated than that. You see what I mean? Like, it's not just because it's in a bull market, do you think everybody's making money? No. Most people was not able to participate in this move in 2017. Don't you realize that? Most people lost crap load of money and completely tanked their account in 2015 and 2016 waiting for that big short. And then they lost all their money. They don't have any money to invest in the market. So in 2017, what happened? They missed out. Not everyone making money in this market. Just because we're on a bull market doesn't mean everybody's making money. Just because we're on a bull market, if you just keep buying every dip, that somehow it's going to work out. No, it's not that easy. And you know what? You listening to this, you know exactly what I'm talking about. Despite of your mentor or whoever you're listening to, whoever you follow on Twitter, despite what they say, you know it's not that easy. You know it's not that pretty. It never is in the market. You see what I'm saying? So I always try to be as real as I can with these videos, so the real people can have to follow these real videos, right? But anyway, so let's continue to give benefit of doubt to the buyers, but at the same time, know that we are in an extremely overbought sentiment and condition on the weekly chart. But that doesn't mean that it has to come down. It means that odds are stacking up against the buyers. But can we see some kind of unthinkable next week where this thing just starts to just really pop? It's a possibility. It's a possibility. Let's say if we see Spider starts to really pop next week, what do you think I'm going to be doing? Chasing this? No. I will be closing out more of my call positions that I'm currently holding on the equities and some of the indices and sectors as it continues to rise, continues to pop higher. Because then odds are even more stacking up against the buyers. Because sooner or later, we are going to see that correction. Nobody knows when. You see what I mean? So let's continue to look at this market and say, you know what? Let's be defensive. Let's say benefit of the doubt continues to go to the buyers. But at the same time, we're dealing with this very, very extended levels. And we're extremely overbought. So let's be not carried away. And another thing that I want to say is the market pretty much went pretty smoothly since, we had about 10% move since like late August. And it trained a lot of traders to be complacent. They are at the point where if you just go and look at what they're saying, these amateur traders, what they're saying, they think that this can never come back, never pull back. They're like, this market never is going to pull back. It's always going to go up. And when most traders do not expect it, when most people don't expect it, that's when the correction is going to happen. Until then, this market is going to continue to condition them to be what? To be complacent, not to fear the market. You see what I'm saying? And that's when the market is going to come and knock them out cold. I'm telling you, that's when the market is going to come and knock them out cold. So that's how I think of this market. Long term, I'm bullish. This is the reason why I'm still holding very sizable, holding a lot of stocks, investment stocks that I've been holding since 2016, like mid 2016. That was when prior to the election, that was when I started pumping out videos like 5 reasons why stock market is not going to crash. 5-year bull run is coming. I also did a video on, you know, extinction of the bears, you know, things like that. So obviously, you know, recently acquired Twitter, which I talked about. You know, I wrote an article about, which we'll talk about it today. So Spider, looking at more of a minor term perspective, we have this 10 EMA starting to continue to act as support here. We're starting to see a little bit of continue to see some bearish divergences on the oscillators here as this thing continues to grind higher. But in the minor term, as long as it stays above 10 and 20, we want to give benefit of the doubt to the buyers. So as long as it stays above 10 and 20, let's continue to give benefit of doubt to the buyers in the minor term. It stays above 50, it's intermediate term. Also 100 intermediate term. So those are the levels to watch. We do have a bit of various divergence here. Let's look at it real quick. Here's a spider right there. So you can see also the 65-minute chart that 50 MA has been acting as support. Look at that. So you can see price is making higher high, oscillator making lower high, but it's grindy. It's not like potent, but it's there. So it hasn't been confirmed. You know, if this thing gonna start to really pull back, you want to see 265-ish broken. So you start to see something like this, and then this thing starts to cultivate lower highs and lower, and you start to see that 50 MA starts to curl down and start to act as resistance, right? Where 50 MA on this 65-minute chart continue to act as support, right? And so for the minor term to intermediate term to turn bearish, you want to see that 65-minute chart, 50 MA starts to act as resistance, and you start to see this cultivation of lower highs and lower lows, right? So that's how you can able to identify if we're in an uptrend or a downtrend. So right now we're on uptrend, the minor term. Let's continue to give benefit of doubt, but let's see how it plays out. Next week, IWM quickly. I'm still holding pretty. I've been trimming. I closed another 1.4 at the top here around 155, but I'm still holding pretty sizable call positions. I've been accumulating back in April, May, June, July, and August, and a little bit of maybe double top. But last time I threw that fib here, as you can see, right there. So that right there, measuring this to that, got up. Hit that where 50% retracement, coincident with that 20 MA. We are getting back up here. A little bit of bull flag possibly on that 10 MA. If the market pops next week, Russell 2000 could pop here because we fill the gap. We got the 10 MA right there. It found support at 20. We're above the 10. So benefit of doubt continues to go to the buyers. So let's see if this bull flag type of pattern plays out next week. If not, we may fail and come back down to 150. If we do see a move, we're probably gonna get up here. And I still, my next target is around 158-ish, 159 before closing out some more of that calls I'm holding on IWM. So let's continue on. XLF is finally. Not finally, but we are now getting into that 138.2% extension level, right? I measured this to that. We got up, pull back, first level fib, find support on that rising pivot, horizontal pivot, and then we're at this level. Your next target will be 28.26. If we can grind again, if we can see a pop next week on the overall market, probably gonna get back to about 28.86. But right now, kind of interesting pattern here, a little bit like rising wedge type of pattern. So it's a 50-50 scenario. If we lose this, it could fall back or it could break up to the upside. So right now we're kind of dealing with kind of a juncture here, but we're staying up above 10 EMA here. So let's see how that plays out here. Let's go to XLE. XLE finally broke out. I am very pleased with that. I've been accumulating call positions back here around 64 and 63-ish, and then I bought some more down here. I also have ERX, the 3 times short. I bought both calls on XLE and some shares on ERX. I like XLE long term. I think there's a chance that next year or so we can get to all-time high, which is 100. But right now, we're no longer in a downtrend. Can you agree that with me? We're no longer in a downtrend. We're not this anymore. What are we? We're in an uptrend. We are cultivating high, higher high, another higher high, low, higher low, right? We're finally seeing that bullish golden cross. We talked about that last week or a few weeks ago on the market update video, right? That golden cross right there, that was a golden cross right here, and that was that dead cross, right? That golden cross, right? So that's that. So long-term picture, XLE is starting to look really, really good here. Let's go to Twitter. I've been acquiring Twitter since 20, which I wrote an article about. This was that what is it? Let's annotate that. Where's my box? There. Found my box. This is island reversal. We talked about on my video how I am positioned, episode 2. And then the article, if you go to article, Twitter, I am a long-term investor on Twitter since 20. There's a video there. Talked about this is, here, let's put a box there. So, you know, we can see that this is island, right? Oh, that's not a box. Where's my box? Oh, there you go. So you can see now. Now it's your visual, good visual there. So you can see that's island, right? And that downside gap, that upside gap still open. And then ever since then, that thing broke out. Also good news about Twitter is that we also broke out of this recent kind of rising resistance now, but we have met with where? This prior resistance. This is overhead supply. Lots of supply here, lots of resistance. A lot of people are scared this level because last time we hit this level, this thing tanked. So a lot of people who are maybe bag holders, they've been waiting. Finally, they break even and they're going to unload some positions, right? Okay, I'm good with the breaking even. And so there's a lot of resistance here. But this is actually a pivotal level for Twitter. If you want to learn more in depth about this level, you can go to my article, Twitter. I'm a long-term investor on Twitter since 20. Twitter needs to get above this. Twitter needs to get above that and then do something like this and call to an uptrend. Then Twitter is ready to cultivate and start to inaugurate primary term uptrend. So until then, we're technically in a primary term downtrend and we're technically still moving sideways. Could still be a basing period, right? So worst case scenario, this thing starts to really base like this for years before getting up. Or we get down a little bit and we finally thrust above 25, 29, hit around 30-ish. You know, it may not be 30 exactly, maybe 30, 28, 29, and then pull back, cultivate another higher high, and then get above 30. Above 30, I think that's gonna be when this Twitter is starting to really establish primary term uptrend, right? So there's a lot of work needs to be done, but first things first, we have cultivated equal highs. That's a good sign. That tells us that we're no longer in a downtrend because we're not in a primary term lower lows and lower highs. We have now cultivated equal high. So now we can say that this is a basing sideways move. But can we break out of this? That will be the question in the next several months here. So, you know, if I see anything, I'll update my article. Or maybe bring it up in the market update video. But so far so good. Let's see how that plays out next couple of weeks. We'll follow up. GLD. GLD is interesting here. We talked about the last market update that this is a 50% retracement zone. That's exactly where we found support here. We also talked about how, you know, a market loves to do that. There's uptrend support and then it breaks below it. You know, let everybody get scared out. This is a prior resistance level. And then there's a lot of people that start fleeing like, oh my God, gold is breaking down. And then so they close out all their positions. Longs get stopped out. Shorts get burned because they start their short position or put, and then it goes up here. Well, same thing happens again where we got that uptrend support and horizontal pivot. Let's zoom in here a little bit actually. You can see uptrend support, horizontal pivot right there, right? Similar to here and here, right there, right? So that's how the market operates. Market knows what levels you're looking for. Market knows where all the stops are. It takes out stops, and then, you know, the shorts, they start to go short, start to accumulate put positions, and then it reverses on them, right? So the good news about it though, if you're a long-term kind of a long-term to intermediate term bullish on gold is that low is definitely higher than this low. Can you see that? That low is higher than this low. That low is higher than that low. Can we see that we still have some higher lows? However, in the minor to intermediate term right there, we're still working with the lower high. So what we need to see this thing getting up, clearing above someone left that level, something like that. Can we see maybe some sort of invert head and shoulder? Or can we see this thing getting up, pulling back, and then doing something like that, right? Get up, retest that old resistance as new support, something like that. Again, I'm going way ahead of myself, but I like the long term. What I'm seeing right now is that we're seeing basing period in the long term. I think this is kind of a constructive, constructive move that we're basing out here, possibly some kind of accumulation phase or stage 1 accumulation. We got the distribution. Excuse me, we got the accumulation before the public participation, right? So in this accumulation phase, things get hectic. It doesn't always move fast. It doesn't always, establish a good looking uptrend. It's gonna have a lot of shenanigans, head fakes, and traps, and all these things. But I think if you look at things a long term, I think it's a constructive move. That the gold market is not in a downtrend anymore. If anything, we're in a sideways market. So still got a lot of work to do. Let's see how that plays out. We'll follow up in, I don't know, next several weeks here. Finally, Bitcoin did see that level acting as support. Let's look here. Right there, right? So prior resistance area, new support. And that's a level where I filled this gap as well. And that's a level where we're coinciding with that 50, very near to 100. So we got that 100 SMA here, prior resistance. That gap has been filled. A lot of dip buyers rushed in here. So that's a, that's a good sign. In the minor term, looks like potentially this could be gap back up here. For me, I haven't touched Bitcoin ever, and I probably won't touch it here. I don't like this kind of move here. I mean, there are plenty of penny stocks that does same way. I mean, similar way. This is not just another asset class, guys. What other asset class that we have that moves this way? Tell me, what other sectors and indices that loses 30-40% in 3 days? This is not just another asset class. This is, to me, this is just, you're just gambling at this point, just like anybody that's chasing penny stocks. And if you can if you're able to make some money here buying these dips in a couple of days, something like that's great. But me, I'm gonna stay away. I'm not gonna trade this. And again, I'm not here to criticize you if you do trade Bitcoin. It's just not for me. But again, this is a level. This is a prior resistance. It seems like we found some support. A pretty strong accumulation. That we got some good volume today as well. So that got back up here, and we got this gap here. So that's a level, maybe a target. We got another gap here. That's possibly another target. So some of those levels could be kind of looked at as a target there. Let's do. It's tough to do technical analysis it has been moving like this, but I did an all-time high from the lows to the highs, Fibonacci analysis, and the last level of Fib was about 1,368 on this GBTC, right? And that's kind of that's coinciding with the prior resistance, 100 SMA and 50 minutes. So it looks like that's where it came on. A lot of dip buyers came in. But there you have it. I know a lot of you guys asked me about how I think of it. I don't have any position on it. Let's look at monthly chart for fun. No, actually, I want to look at weekly. Yes, so weekly. And we'll call it a day after this. Weekly, we're just a little bit of that, a little bit of here. Right, RSI is there. So yeah, we're kind of, you can see last time we hit it, we kind of had this is weekly chart, so we had like couple weeks, several weeks of downside runs, several weeks of downside weeks. So these oscillators are maybe insinuating some. I'm not sure at this point, but those are the levels that you look at. So again, that's it for me. Again, Merry Christmas, everyone, and I wish that you unload and you unwind and this weekend and spend quality time with your family and friends. And we'll come back next week and see how the market goes. And again, another announcement, there will be no market update next week. So this will be my last market update this year. I'll come back to you first Friday of January, which is January 5th. January 5th, that's when we'll look at the market. We'll kind of follow up on some of the indices. But next Friday, there will be no market update, right? So have a wonderful weekend. Good luck trading.